Elon Musk wants his employees back in the office, and he's keeping a close eye to make sure that it happens. Reports saying that Tesla is sending emails to workers who haven't, quote, badged in to the office.
In this video, analysts react to Tesla's Q2 production and delivery numbers. Elon Musk is laying down the law at Tesla, and new data shows Tesla still has no competition amid surging gas prices. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. First of all, Elon Musk is done with people pretending to work from home and is laying down the law at Tesla. And by laying down the law, I don't just mean telling people to come back to the office, but making sure they actually are.
Elon Musk wants his employees back in the office, and he's keeping a close eye to make sure that it happens. Reports saying that Tesla is sending emails to workers who haven't, quote, badged in to the office enough. Pras Subramanian is on this story, a couple other EV stories for us, but Pras, explain this to us, because we heard from Musk just last month. He wanted a lot of his employees back in the office at least 40 hours a week, but he looks like he's really taking this to the extreme and monitoring when people actually come in.
Yeah, imagine you go to work and every time you scan that badge, you go in and out, they're tracking where you are. You know, you're right, Musk said, I want my people in the office 40 hours a week minimum, and they're actually going to do something about it. So Insider reported this story earlier today. They got some emails on blinds, employees getting these warning emails. We have one up right now. So it says, like, you're receiving this email because there's no record of you using the badge to enter a Tesla facility on at least 16 days over the 30-day period ending on June 28th. Please clear the reason for your absence with your manager with a copy sent to absence@tesla.com, HR people, blah, 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 blah. You know, employees are upset by this, right? Because it seems a little bit creepy, and it's kind of like, you know, trust us to do our work. And Elon's saying, no, we want to prove you're in the office. So it's not surprising this happened, but you got to imagine for someone like an Amazon or a company that doesn't care about that, they can poach some good talent from Tesla.
Poach some good talent? You mean useless wankers. Now, don't get me wrong here. I'm sure many people will be a little bit, oh, that's a bit weird. Why can't you just trust me, Elon? But Tesla's already using these things. Obviously, they've got the data. It's not that hard to cross-reference. Is someone here or not here? If they're not here, please explain. I think this is reasonable. This technology is far from new. My very first job had a fingerprint scanner on and off for shift, and that's how we got paid. This was the late 90s. Even our high school also introduced cards for us to swipe on and swipe off at the end of the day to ensure that we weren't wagging, aka skipping classes. Unfortunately for the school, and fortunately for some of the more experimental among us, we soon realized we could just hand off our cards to a friend to swipe us on and off for the day and not turn up, despite the fact that in classes there are also roll calls. We learned quickly that these weren't being cross-referenced. Not that I personally would have taken the opportunity to not attend classes at all during high school, but some people certainly did. I guess our school wasn't run quite as efficiently as Tesla.
And you raise a good point there, and especially with how he acts as a CEO really under scrutiny when you look at SpaceX, with the potential takeover of Twitter. What do you think this does in terms of what people can expect from company culture if Elon Musk does end up being your CEO at Twitter? You know,
I think there's two sides to this story where a lot of the old school thinking is that people in the office, you can talk, you can collaborate, you can actually get ideas and things done pretty quickly. So I think there's going to be some people that actually appreciate that, but it seems like in today's tech world, most people want the flexibility of working from home and the trust that from their employer that they can actually get a lot of work done in a way that's easier for them too, as well.
Ah, yes, the old easier for employees. It certainly is a little bit more convenient not having to commute and go to the office, but I don't think there's anyone on earth currently working for Tesla who's working for Tesla because they expected it to be easy. Instead, they're working there because it's meaningful. And I get the argument for both sides. In some special cases, as Elon's pointed out, if you can prove it makes sense for you to work remotely or an exceptional talent, sure, whatever. But outside of that, come to the fucking office. And I understand why. If you're a company with an extremely critical mission, you have lots of problems to solve constantly. There's issues, urgent issues that need solving. The pace of change and innovation is so fast. You need to be in a collaborative environment with people right in front of you to quickly solve problems, to discuss, to communicate, and move forward. I know there's going to be some Poindexters in the comment, oh man, you can just do that on Zoom. It's not the same. We all know it's not the same. Otherwise, why would you even bother catching up with your friends in person ever? Ever. Just Zoom all your friends. And your girlfriend too. I mean, why would you go visit your family during the holiday season? I mean, just Zoom them, just Skype them. Just give them a phone call, right? It's the exact same thing, right? No, it's not. I think intuitively we all know this. Many of you watching who may argue work from home is great and convenient. I get that. I understand that. For the employee, certainly better. Don't have to commute. Don't even have to wear pants if you don't want to. You can work from home. But a company full of employees working remotely who aren't spending time in the office are just not going to be able to move as quickly as Tesla does, and needs to continue to move.
Am I the only one here that thinks everyone that has a badge ought to expect that their company's tracking when they're in the office and not? You should not have an expectation of privacy if you are swiping in and out of every room.
Totally agree. And I mean, let's be honest here. You'd have to be suffering from fairly severe brain damage not to put two and two together and think, I'm scanning on and off in my office. Surely my company must have that information. And if they wanted to, they could check when was I in the office? When was I not in the office? I mean, this should go without saying, right? A quick aside on this topic. Long story, years ago, I was working in a shared office environment, multiple businesses working from the same office. Anyway, a business that was sharing our office space had a bunch of interns doing work experience / work for almost nothing, contributing to the company. There was, I don't know, half a dozen of them, give or take. The owner of that business would always turn up to the office around 11 or 12 at the absolute earliest in the morning every single day. These people began work at 8 a.m. After a couple of months, they realized boss isn't turning up before 11ish in the morning, maybe 10 at the absolute earliest, so we can turn up a little bit later and he'll never know. Obviously, you know where this one's going. He turns up one day at 9 a.m, no one's there, and they all immediately get fired. And when I say immediately, he waits around until they actually start turning up one by one. They walk in absolutely mortified to realize they've been caught. Systematically, as soon as they arrive, bang, you're fired, you're fired, you're fired, you're fired, you're fired. The point here, there are some people, not everybody, but there are some people whose nature it is to simply take advantage of a situation. These are the kind of folks Tesla absolutely does not want working for the company. I think this is a great way to get these rats to flee the ship. You don't like being called out for not turning up to the office? Good. Don't turn up to the office ever again. You're fired. Go work for Amazon or Apple. I'm sure you'll be more appreciated there.
Yes.
Including our own
But
building.
what would you do if you got an email saying, hey, take us out of it because we have to be at the office every single day, and it's very obvious when we're not at the office. But if you didn't know that you were being closely monitored.
I just assume you are.
Again, totally agree. I mean, honestly, you'd have to be an actual fucking moron to be swiping on and off, scanning on and off at work and not thinking, does that mean that they know when I'm at the office or not? And now onto some more data showing Tesla has no competition.
All right, but gas prices staying stubbornly high. Consumers are on the hunt for electric vehicles. Check out some new Google search data on EVs compiled by Goldman Sachs. You can see a big spike in search interest in recent months, with gas prices staying elevated. Interesting chart of the day right there.
Interesting chart indeed. We can see search interest for the best electric vehicle and best Tesla approximately quadrupling since 2014. But the more important thing is consumers who actually do the digging and follow up on those search results after they get through the ads at the top of the Google search results from companies whose EVs are so shit they have to pay to advertise. People searching for best electric vehicle because that's the only way they're ever going to appear in the results. As these consumers do some digging and comparisons and start looking at range, performance, cost and so on, if their brain works and they dig enough, there's only one answer there. Best electric vehicle, it's a Tesla. Unquestionably. Best electric sedan, Model 3. SUV, Model Y. With a little bit more to spend, want some insane performance, Model S. Maybe even a Model X. This is a good indicator. Massive surge in searches for electric vehicles in general and for Tesla specifically. And a fairly interesting correlation with the recent explosion in gasoline prices. Money talks, and the more pain at the pump, the more people are likely to go, hang on a minute, what about those EVs? Let me check, let me do some Googling. Oh wow, I might buy one. Now onto some of the initial reactions on Wall Street to Tesla's Q2 delivery and production numbers. Al Root writes, electric vehicle maker Tesla delivered 254,695 EVs in the second quarter of 2022. That's, well, okay. It's a drop of 18% compared with the first quarter deliveries of 310,048 and breaks a streak of 8 consecutive quarterly records. But June was Tesla's best month ever for production, according to the company news release. On the whole, the result feels fine, perhaps even a little better than expected considering production constraints caused by the insane lockdowns in Shanghai, which completely f***ed Tesla and the rest of the auto industry. The consensus forecast called for about 340,000 to 350,000 units in early April, before that figure dropped to roughly 260,000 units by the end of Q2. But not all analysts updated their numbers to account for production constraints overseas. Why? Incompetence? Brain damage? It's worth pondering why every single stock analyst covering Tesla, considering that's part of their job, wouldn't have updated their estimates based on the obvious loss of volume from a shutdown in Shanghai that lasted almost a month, plus then ramping back up. Tesla, along with the entire Chinese auto industry, operated at significantly reduced rates in the second quarter as officials locked down parts of China in a futile attempt to help control a rising number of infections. The newer estimates from Wall Street called for roughly 240,000 units, with Wedbush analyst Dan Ives, shout out to the green tidal wave himself, writing this past week that 250,000 units was the line in the sand. Above that number was a success, therefore Tesla had a success according to Dan Ives. Below that number would have been a disappointment for investors. By that thinking, the second quarter number was an inline result. Quote, in a nutshell, while Q2 delivery numbers were ugly and nothing to write home about, the street will be focused on the trajectory for the second half, wrote Ives in a Saturday report. He was encouraged by Tesla's statement about June production. Strong delivery results tend to mean good things for Tesla stock. In 7 of the past 10 quarters where Tesla beat analyst expectations, the company's shares outperformed the market from when Tesla reported deliveries until it released quarterly results. Let me know in the comments below what do you think will happen this time. For the first quarter of 2022, Tesla met expectations, but that wasn't good enough. The stock fell about 10% between the time Tesla reported its earnings and its delivery results. The S&P 500 dropped about 2% over the same span. Totally makes sense, right? How Tesla stock, or any stock, responds to news is always a function of what's come before. In the lead up to Saturday's release, Tesla stock has been badly beaten, falling almost 38% in the second quarter. Shares are down about 35% so far this year. I mean, this is such a head scratcher. I understand why it's happening, but there's no rational explanation. It's irrational. It's explainable. I can explain irrational behavior, but it doesn't mean it makes sense. While the S&P 500 and the Dow Jones Industrial Average have dropped 20% and 14% respectively. Inflation and rising interest rates have hit auto stocks harder than most. The tough macroeconomic backdrop hurts car stocks in a couple of ways. Inflation threatens profit margins via higher costs, unless of course you're in such a powerful position with such insane demand that you can proactively raise prices to ensure that you're not at all affected by any inflationary pressures. Anyone know of any companies that are selling every product they make and have wait times of 3, 6, 9, 12 plus months depending on the region and the trim of their product? If you do, please let me know in the comments below because I might buy some of their stock. And rising interest rates, used to fight inflation, threaten new car demand. I want to clarify. They threaten new car demand in the cases that the car isn't actually that great, isn't such a compelling product that people are willing to bend over backwards to get their hands on one. Many automakers will get completely fucked due to inflation. Tesla is not one of them. They're still going to sell every vehicle they make for about the next decade. You can count on it. Most vehicles are purchased with financing, and higher rates make monthly payments more expensive. This is a fair point, but again, Tesla insane demand. Very few of their vehicles are actually purchased with finance. If financing wasn't available for any Tesla vehicles for the next decade, they'd still sell every vehicle they made. Tesla investors have also been dealing with some Tesla-specific issues. Tesla stock is down about 40% since CEO Elon Musk's Twitter stake was disclosed. The Nasdaq Composite is off about 23% over the same span. Question: does this make sense? Answer: no, but it happened. Read between the lines. You might see the word opportunity in there somewhere. Maybe. After digesting delivery news, investors have second quarter earnings. Those are due in late July. Wall Street expects Tesla to earn about $1.85 per share, down from $3.22 earned in the first quarter of 2022. And now some comments from Jefferies. First view, Tesla Q2 deliveries, relative weakness as expected. Key takeaways. Q2 deliveries came in a blah blah we all know, up 26% year over year, 18% below Q1 and slightly below 257 company collected consensus. Model S and X deliveries continue to improve sequentially, up 9%, while Model 3 and Y increased 20%, which is down 19% from Q1. Production disruption in China has been well publicized. So has sharp improvement since, with Tesla mentioning record production in June. We had adjusted our forecast to 257,000 units on the 26th of May and keep our preliminary Q2 revenue at 16 billion, auto gross margin at 26%, which is down 400 basis points from Q1, new factories ramping, plus shutdowns to be expected, on weaker cost absorption and production mix given higher contribution in Shanghai. This yields Q2 EBIT of 1.86 billion, an 11.6% operating margin, and a $300 million write-down on Bitcoin, with the latter likely to have increased to around 500 million. Definitely correct. And for those of you playing along at home, Jefferies currently has a $1,050 per share price target on Tesla stock, significantly above where we're at today. No doubt we'll see a wave of reactions from more Wall Street stock analysts as the markets open this week. If their brains function, most will have the exact same thing to say. Numbers were down, but we knew that was going to happen. No big deal. Tesla's still dominant, and our price target's still here, while Tesla stock's still here. Of course, there may be some exceptions to the rule, but I think this is going to be the general consensus opinion. And just for the record, I have literally zero idea what Tesla stock's going to do when the markets open. happen. In fact, I have less than zero idea. No point making predictions about the way the stock moves over the short term because it is entirely unpredictable, completely irrational, and never makes any sense. But I would love to know what you guys and girls think. What happens to Tesla stock this week? Up, down, flat, or all of the above? And lastly, don't forget to join Patreon with the card in the corner or the link at the pinned comment. Just a quick heads up, there will be some updates coming to my Tesla stock price targets and valuation model. I'll be integrating the actual numbers from Q2 now that we have those. It won't make a big difference because my production estimates were pretty close to the mark, but stay tuned for that. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.